I don't think that this is a bad thing overall for the final expense industry. The carriers that this is happening to are by and large carriers that set themselves up for this, either by not adapting, by not keeping pace, or by being too agent unfriendly, and the agents are voting with their feet.
I do have Nick on to discuss the impending industry collapse. Like, is everything broken? Are we all unemployed? What is happening?
Oh
But it sure
no.
seems like with everything happening, people are very interested in what we have to say about it.
Hey, a hot take for a short. Everybody in the insurance industry is going out of business. We're all going to fail and die, and we're all going to have to find other jobs and maybe go get like work for a bank or something. I don't know.
Work for a
We're
bank.
we're in trouble. Oh no,
It's done. Like, you're
it's
laid
done.
off.
We're over. The industry's over. Close up shop. Life insurance sales is dead.
There's nothing left to sell.
No.
No, not only can you not get leads anymore because direct mail's dead, you don't have anything to sell anymore because that's dead too. Is that really what's
Yeah,
happened?
every company is going to close up shop, and there will be no leads. And besides, everybody over the age of 50 is going to die pretty soon anyway. So why are you selling
It,
to those people?
and it'll all be sold by AI, whatever's left, so you're not even necessary.
Like genuinely, like I am so not concerned about stuff getting sold by AI instead of by humans. Like
And
I feel like this is absolutely not a thing that is going to happen effectively, maybe ever. Um, People have been trying to chatbot stuff forever and a day, and I
Mhm.
just don't see it. Anyway, yeah, side issue, not what we're here to talk about today, but like, man, that is an overblown issue.
Yeah. But what's interesting too is that people are watching. I was just speaking to an executive at a carrier that was watching the recent episodes, which is awesome. If you guys are watching, continue to comment below on social media or wherever you catch the video. Continue to subscribe. Nick, we just hit 500. How cool is that?
That is very cool. Like slowly but surely, it took a while for this one to kind of to catch on, but I feel
Mhm.
like subscribers like doubled in the last month or something like that. It's pretty good.
Pretty
It's
pretty significant. Interestingly enough, Adam texted me a screenshot of another channel. He's like, I'm pretty sure that guy's buying subscribers. I'm like, I'm pretty sure he doesn't have 10,000 people worth of things to say either, but not a single
yeah,
one of our subscribers is bought and paid for. So steady
yeah,
growth.
steady growth, organic growth, real growth.
Absolutely.
We're not running YouTube ads, we're not running Facebook ads, we're not driving traffic here. The YouTube algorithm does not support this kind of content.
Hmm.
I'll throw in a little pitch. If you think this is a good channel that has things that are worth saying, comment every time you watch a video. It doesn't even have to be anything, just say hi. And hit the like button, because those are the two things that make YouTube want to show this video to people who are not already subscribed. Obviously, subscribe, hit the notification, all of that kind of stuff. But if you really want other people to see this channel, the best thing you can do is just type anything at all in the comment box and hit the like button. That is what will get other people to see this.
So what's interesting is the perspectives and the comments, I guess, came live through my Facebook page, interestingly enough.
Yeah.
Over our last couple of videos, what are some of the comments that caught your interest or your dislike, or what did you think about what some of the people said?
Well, so I find that most people tend to be agreeing with us,
Hmm.
including, interestingly enough, some executive type folks, some type of a C-level type folks that really do get to see the industry from a much higher vantage point than we can. Um, and some of those people are feeling like we were pretty much on the money, which is always gratifying. One or two people who also said that they were sort of C-level folks said that we didn't say anything wrong, but lacked perspective and depth, which I don't know if that is I mean, maybe. Like, I can only see what I can see. I can only see what's going on from my perspective as an agent working in the field and working with these companies and these clients every single day. And we probably would lack some depth. And honestly, in a 15-minute video, like, there's only so much depth you're ever going to be able to get into. That's the depth conversations are for the comment section. We will only ever be able to do surface level without doing like multi-hour
3 hours.
videos. Yeah. So
We're
it's never going to be
Yeah.
depth.
We're pushing an hour on this topic between the first video, the second video, and this video. So you are
Yeah.
getting pretty in depth on it, but please, we do appreciate the comments.
Yeah.
Interestingly enough, Ramiz commented yesterday,
That
who
was
has
just about to
some
bring up.
experience, he
Yeah.
has some experience that the broker model may be breaking these carriers, to
Yeah.
paraphrase things. And I think I said in the first video, the massive shift between the jersey wearing, flag flying IMO era to the I can pick up a contract wherever I want era has led to where we are now. That shit has caused a lot of issues.
Well, it has changed the landscape in a way that I think people failed to predict. Right? I don't think it's causing any long-term issues, but I think the landscape has changed in a way that some people have failed to predict. And there are a few things that were failed to be predicted. I mean, nobody predicted the pandemic or what the fallout from the pandemic was going to be. Even once we knew what that the pandemic had happened, nobody really anticipated how the world was going to change in the wake of that, the rise of AI, because that is actually, like, as much as I'm not worried about AI taking our jobs, that is a thing, and it has changed things, and it has changed the way that business is being done. I think largely in a positive way, but in a real way. Um, and I don't think anybody could have seen that coming. I don't think anybody could have seen the rise of ChatGPT or Midjourney or the ability to advertise and create leads in the way that we are able to. The shift in the social media dynamics and where people are spending time on social media and the demographics that are spending time in the different social media landscapes, and how advertising to them and data mining from them is changing, and the way that prospecting has to be done is changing. Um, I think a lot of that was unanticipatable, if that's a word. And I think the landscape has changed because of it. But the thing that Ramiz is talking about is the idea that a carrier that has one really strong underwriting niche and um, no other real strong value is just getting slammed on just that underwriting niche in a way that I think they were not expecting. And he brought up the GI model. Like, he was saying, like, GI companies are really struggling right now. And legitimately, I don't know if that's true. I've never looked at those numbers, but I believe that Ramiz knows what he's talking about. But he was saying that the GI model is really struggling now because for GI companies, the Gerbers, the American Generals of the world, for those Mutual Omahas, for those products to work, they have to sell those products to people who are healthier than GI, right? And like people like you, Chris, who go around saying, "Don't write GI, you can write this, 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 and this." They don't need a 2-year return of premium. Hurts their bottom line. And it makes it difficult for them to offer those products. By contrast, I feel like there are companies out there who are doing such a good job of advertising, Mutual Omaha being one of them. I don't know that that's really, like, ever going to be the things that you and I are doing and telling agents to do, and helping agents be more profitable, and helping agents help their clients so clients aren't on 2-year return of premium policies when they don't need to be on 2-year return of premium policies. Like, helping the consumer segment that way. I don't feel like people like us are making really that much of an impact on the industry as a whole. I am not quite that narcissistic. And I don't know that it's moving the needle as much as people like Ramiz think it is. But it exists. It's real.
I think what might be moving the needle, though, in this realm of carriers being over niched and anti selected is where you have an agent. Let's just call him Jeff Perez, because that's a
Sure.
real person that cost me a lot of money. Hi, Jeff. I know you're not watching. Wish I could take you to court. And Jeff decides I'm in debt with Chris's IMO. I owe so much money. When I write a piece of business, I'm not making any money. I'm going to call Nick. And I'm
Right.
going to get a contract for Colombian. God rest its soul. They're not active anymore. They don't care. And I'm going to get a contract with Colombian under Nick. And As soon as I build up a bunch of debt with Colombian, I'm going to move on to John. And that
Right.
created an underdwelling of stuff maybe they didn't actuarially predict. That's part of what I'm thinking in this situation develops.
And I think that is also real. And I think that's maybe a bigger issue than companies getting adversely selected against niches that they have built into their products, because I have to believe I have to believe that the actuaries behind these products understand that they have a market niche and that they are willing to take that risk in that segment. They wouldn't they wouldn't they wouldn't build that into their product if they didn't feel like they had an understanding of it. A lot of people get paid really, really, really lots of money to be able to figure these things out. Actuaries, by the way, if you have children and your children are good at math, actuary is actually the highest paid job in the United States of America. You make more money as an actuary on salary than any other salaried position in the entire United States. Go
Interesting.
become go send your kids to advanced mathematics classes and turn them into actuaries if they are so inclined.
Could
Um,
it also be that, as we discussed part 3 of this industry collapse, hashtag, comment, subscribe, whatever gets people's interest, is that the telesales model made the barrier to entry even easier on an industry with an incredibly low barrier to entry. So not only
yeah,
did you not have to, now you didn't even have to go out of your house to write the business and write the bad business. It made it even easier to F up our business.
well, so I think a couple of things are happening there. It is becoming easier and easier, it seems to me, to get an insurance license. That's not great. It should be somewhat difficult to get an insurance license. I feel like at one point it was. I keep hearing stories of people like deciding that they're going to get their insurance license and 4 days later being licensed, and that seems not right. People shouldn't you should not be able to be licensed to sell insurance in less than a week. Like, that just feels wrong to me. And so yeah, I mean, stuff like that is happening. And I think what you're talking about of agents submitting and issuing business that should not be issued and then getting charged back on it, causing the carrier to take some initial load losses from, activating a policy that then lapses, free looks, whatever. And then the person just jumps from carrier to carrier to carrier. There should be some more safeguards around that sort of thing. We run into an issue, though, of the barrier to entry as an independent agent is reasonably low
Very low.
in the life insurance side. The barrier to entry from what you need to do is reasonably low, and the income on the life insurance side, at least initially, is fairly high. Problem is, it became that way because nobody was becoming insurance agents anymore.
Yeah.
And there was this huge problem back when I got started of the graying of the insurance industry, where everybody who was selling insurance was in their 60s. And there was nobody who was my age when I was getting an insurance license. And now it feels like there's just a ton of young people that are getting licensed. And when I was in my early 30s, I was the only person my age. And now that I'm in my early 40s, I'm still the only person my age, but there's a whole bunch of people in their 20s and
Yeah.
30s.
It overcorrected. It
It
simply
overcorrected a little bit.
corrected. And
Yeah. And it's coming back on the Medicare side. Again, nominally this is a Medicare show. So like on the Medicare side, like they are raising that barrier to entry once again by kind of doing what the property and casualty world did, which is just make it hard to really make any money until you've got a lot of clients, and force you to have a book of business in order to have income. Life insurance has never worked that way. And I know you and I have been talking a little bit about home service modeling,
Mhm.
which is, I don't know, maybe a topic for another show. Definitely a topic for another show, something I would like to give an entire like half hour to, because I think it's a really fascinating topic. But um, in the landscape as it is today, I don't think a home service model commission structure will allow new agents to survive
But
without without ending up having to take predatory contracts from predatory agencies, because I feel still that the agencies themselves are the issue more often than not.
I I agree.
Not the individual agents. There are bad actors in all spaces, but I feel like the overwhelming majority of individual agents who are trying to get into the space are not bad actors, whereas the overwhelming majority of people who are trying to start insurance agencies actually are, whether they know it or not.
Could the
I think many of them have been told that they're not doing anything predatory, but they are in fact
yeah.
being predatory.
Could the private equity push into the industry have been this push onto the carriers that they weren't calculating in that has led to this issue? Now, I would absolutely sign a deal from private equity tomorrow if you offered me one. It's
Hmm.
not me hating on you. You want to pay off my house and give me a salary? We'll have that conversation. But this massive private equity push, which has pushed others into this huge profit era, could that have had a push back on the carriers too?
So on the life insurance side, is there as much of a push on the for the private equity outside of the MLM models? I know private equity has been buying up MLM shops. But actual non MLM, like, because private equity is buying the big MLM shops. You
Mm-hmm.
know, private equity is buying the three letter IMOs,
Bought
four
them
letter
all.
IMOs.
Yeah.
Yeah, they're all, I mean, all purchased. I don't think any of them are independently run anymore. I can't think of any that are. Maybe there's one or two. But I don't know that they're purchasing even one level down from that,
Well, they
right?
bought all their levels too. They bought the entire hierarchy in many cases, you know?
Right. Yeah. Yeah. I mean, yes. Yeah. I mean that. Yes. Um, and I guess some people got payouts. Those large MLM distribution models are a problem for the industry in a lot of ways. They really are. They're a problem for consumers. They're a problem for agents. And the longer I do this, the more that I am like leaning into consumer advocacy as opposed to just purely agent advocacy. I feel like for the longest time I've felt like, I am the Lorax, I speak for the agents. But the consumer protection side of this is real. And there needs to be some consumer protection people who are coming at this with industry knowledge, because I feel like as I look at consumer protection stuff in the life insurance industry and in the Medicare industry, so many people that are working consumer protection have no clue what our side of things looks like.
Yeah.
And it all has to work, because getting rid of agents is bad for consumers too.
Mhm.
Um, I think about, like, I was talking to somebody today through social media who was convinced that her father had just died, and she was convinced that her father believed that he had purchased a whole life insurance policy for $100,000, and he died of cancer, and it was with the only A-rated final expense company, A+ rated final expense company that I'm aware of. And he bought it before they purchased a previous company. And it turned out to have been an accident only policy. And she was saying, my dad knows the difference between accident only and whole life. There's no way he would have bought an accident only policy. Um, and I don't know, like, I kind of believe he bought an accident only policy and said, but then again, I hear agents at these MLM companies all the time say things like, well, if they can't qualify for a fully underwritten policy, if they can't qualify for a real final expense policy, um, if they're too young to qualify for GI, write them an accident only policy. And that kind of stuff is really bad.
Yeah. Yeah.
And it hurts everybody. I mean, I guess it doesn't hurt the life insurance company. Like, the life insurance company got premiums from these guys forever and ever, and
Yeah.
they
Could
don't
it
have to pay
also
out.
be a barrier to entry issue where carriers that are paying next day with no premium drafted and is an issue where the process to conserve a policy becomes cumbersome, so the barrier to conserve it is higher than to rewrite it. And then the fact that in our model, maybe the home service model isn't it, but when you're getting paid paltry renewals, of course the motivation is going to be to pump out new business, and the whole scale is broken there. I remember when the Aetna products with double-digit renewals and the Assurity products with double-digit renewals, the UHL products with double-digit renewals, and now it just maybe that is also pushing against the norms where the insurance carrier needs the business to stick, but they're not designing a process or a pay that
Yeah.
motivates anyone to keep it there.
I mean, and this is agent driven. Like we're creating our own demise here, right? Like agents are demanding 120% contracts, right?
Uh-huh.
And agents are demanding payment on issue, no, or payment on submission. And agents are demanding, like I'm hearing agents asking for 12-month advances. Um, like
No.
this is market driven,
Yeah.
right? And it used to be that like again long time ago now, probably, you know, I don't know the demographics of who watches this, but like I figure if you haven't been doing this for at least 10 years, you probably do not realize that 9-month advances used to actually be sort of rare. You know, you like a 6-month advance was sort of like the standard, and now 9-month advance is like everybody just does a 9-month advance. You don't even have to ask for it. It's not special even a little bit. And that's a long advance. Um, Especially if things are being written on submission, if you're being advanced on submission. Um, and yeah, I was talking to an agent last night who was saying, I mean, he's been in the business for about 2 years, and he was saying to me, you know, one of the things he wanted to talk about is he was looking to hire a customer service rep to do a little bit more business conservation for him, because he said, if it's not a $60 a month policy or more, it is not worth my time if it lapses for me to go get it. I can go talk to a new person and write somebody that I've never met before.
Yeah.
And it's more valuable for me to write somebody new than it is to keep that person on the books. And that's a problem. Like there needs to be
That's
something
the
in
carrier's
the
problem. That's
that's a
not That's not a
yeah,
problem. The agents
no.
identify the problem and knows the solution to it in his head. But
Yeah.
that's the problem on the carrier now that has a 40% 4-year persistency because
Yeah.
the process to conserve it was cumbersome.
Yep.
The pay wasn't necessary, and that's where they found themselves.
Right. It makes more sense for him. Like if somebody's had a policy for 6 months, even if he gets a chargeback, even if he got 100% chargeback, if it's only a $30 a month policy, go write somebody new. Odds are it's going to be a $70 a month policy. It'll wipe out that chargeback. And that's not a problem with the agent at all, right? That is a problem with the way the pay structure is set up and the way the companies are run. And the way the companies think about paying agents and the way the companies treat agents. And when you're running your business 100% on commission, you are going to do everything you can to squeeze your margins as tightly as you can and to get the most profit out of every lead that you buy, especially as leads get more expensive. I know I talked last time about how like the rising cost of leads should be offset by the rising premium that you're writing, but at the same time, costs of leads are going up. I mean, they are. They're People are harder to get a hold of, and people are more expensive to get a hold of, and it's not as big a deal as people are saying it is, but it is going to make agents cost conscious, and they're going to put their time into the thing that makes them the most money, even if they're ethical. You know, there's none of us who are doing this for free. You know,
I just think that maybe they can reevaluate and find a happy medium where maybe the renewals made a little bit more sense, where how to
yeah,
conserve the policy was as easy it was to submit it. Like our submission process with EAPS became so easy, but then some carriers, their conservation process is still 1996. Like that doesn't make much
yeah.
sense.
No, and I will tell you, like, and I'm kind of going out of my way to not mention carrier names, but there is one carrier that I think is actually doing it right, and it unfortunately has the worst application and submission process in the industry. You know, and I think their pay is right. They only pay street level of 110%, but they pay renewals of over 8%, and I think that's kind of right. Like 8 to 10% with bonuses for like they pay bonuses for submissions. For issued business, if you issue over a certain threshold, they pay a bonus. I They're very easy to conserve business with. They proactively try to conserve your business, and they notify you so you can conserve your business. You can alter things through email most of the times. Like, they do everything right,
Mhm.
and yet they're not getting business that they used to get because they've made their application process impossible.
Yes.
And
I
I'm waiting for the company that balances it out. Like, there's a company who is run by kind of a friend of ours, um, that has the best, easiest application process in the industry. And yet, if something goes wrong, holy cow, um, it is a freaking nightmare when things
Yeah.
don't go right. um just like, and by not go right, I mean, like, they need to issue a policy to the prospect. Like, getting a policy mailed to the prospect is a nightmare, let
Yeah.
alone their first draft doesn't go through. Oh my gosh. Right.
Yeah, that's a process problem,
Like,
and then they're just
it,
gonna rewrite it, and even if that next policy is with that carrier and it stays on the books, it's still double the processing costs on the carrier, where
yeah.
that could have been improved process-wise.
And I will tell you, it is a rare situation where if you burn me with a prospect one time, that I go back and
Mhm.
rewrite the prospect with the same company that burned me.
Yeah, because 'cause you're likely
Because
not.
I don't blame the prospect, I blame you. The prospect wants the insurance. The prospect had the money on the 3rd, but you didn't draft him until the 6th. That's not on the prospect, that's on you.
No. I guess in short, we got 3 minutes left on the clock here. What
Yeah.
what do you think is the next shoe to drop? I know we kind of teased this a couple times, but are there more carriers that are gonna exit?
Yeah.
Our entire distribution is gonna be disrupted because of this change? Like, there were IMOs based on Colombian and Great Western, and both products are gone within a 90-day period. What happens next? How bad could this get?
I think those IMOs are going to pivot, and they're gonna be fine, because even if they didn't know this was coming, there are too many options out there, and the people who are in charge stand to make too much money, and I'm pretty sure everybody there is gonna be fine, and there will be some growing pains, and the agents are always gonna take it in the teeth. The agents are gonna take it in the teeth. A bunch of agents are gonna go out of business because they won't be able to adapt and change as quickly as the IMO can adapt and change. But most of the agents are going to be fine, and there will be some grumbling, and there will be some growing pains, and it will be okay. There's going to be more market contraction. Like, it's not even an if, it's a when. I'm expecting next 30 to 60 days, at least one major carrier, probably two.
I'm curious to see
Um,
next because we've already gotten word on several, but
yeah,
two, I think that would even be more significant than what we witnessed the prior 6 months, don't you think?
yeah, yeah. But I mean, I'm almost positive at least one that we're both aware of. That is, like, I'm just waiting for the announcement. And I think there is at least another one that's kind of circling.
Well, I know the
Maybe nothing happens with it. Maybe nothing
yeah,
happens
I
with
know the Colombian wasn't expected as
it.
much as the others were well known that the writing was on the wall. So to see another shoe drop from one we didn't expect really isn't all unlikely, I guess.
No.
No.
That being said, I don't think that this is a bad thing overall for the final expense industry. I don't. I think that the carriers that this is happening to are, by and large, carriers that set themselves up for this, either by not adapting, by not keeping pace, um, or by being too agent unfriendly, and the agents are voting with their feet. The agents stopped writing them. The reason why Wellaby pulled Great Western was because agents stopped writing Great Western. And so they pulled it. It was just too difficult. You
I
know, it,
remember even they updated the e-application and it made less sense. Like,
yeah,
if the barrier to entry is so low from the very beginning and there's any level of resistance, the base level agent is just like, ah, this is too hard. I'm going to go write something else.
right. They don't need You don't need a company that's going to make your life difficult, which is why which is why even companies like the one company who I will not name that does everything right except the application process, um, and people will blame the phone interview in the application process, but I actually don't think it's the phone interview that's the problem, and I think that's people misidentifying the problem. Um, the barrier there is too much for a new agent, and it's a company that new agents frankly should be writing, because it will make everything so much easier. But new agents don't have time. They don't have money. They need to see more people. They need to see more and more and more and more people to be able to get their feet underneath of them. You know, I have the luxury of being able to say, I only need to talk to 6 people a week to do what I need to do. A new agent doesn't have that luxury. They need to be talking to 3 times the number of people every week that I'm talking to. And if you've got to talk to 18 people a week, 20 people a week, you don't have 2 hours to spend just doing an application on a husband and wife. You just don't. Not with the 30 minutes that it takes to get them to the point where it makes sense to do an application. If you're fast and good and it's probably an hour, you're spending 3 hours with one person and you've got to see 20 people that week. That math doesn't add up. There's not enough hours in the week.
Nick, take us, wrap us up for the day, and we'll see you back maybe tomorrow.
Yeah, maybe tomorrow. Listen, I really, 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 really want to talk to people who are not agents about this. I really want to talk to. I would love to talk to an underwriter or an actuary or a CEO, a sales VP. I think we've got a couple of people that are lined up, but I think the most important thing to do at this point is to get out of this particular little bubble. Ramiz, if you're watching, I really want to hear the telesales perspective. I know you watched the last one. I would love it if you're watching this. I want to hear. I want to get people who are not Yumi and Adam talking about this, because I think it's an important topic at an important time. And kind of mapping out a proper state of the industry is important. And frankly, we should probably start getting this done on the Medicare side too, because on the Medicare side, there is as much change and upheaval coming in a very different way and coming from a different perspective. And we should probably get some people talking about that with us as well. And I know some people who we could. And so if throw it in the comments. If you have particular people that you would like to hear from, let us know. We know a lot of people. Sometimes we run into failures of creativity when it comes to who to ask. Throw some names in the comments. I bet you we could reach out and talk to a lot of those folks.
Alrighty, we'll see you tomorrow.
See ya.